Now we are going to discuss accounting standard 9. This deals with revenue recognition. So in this accounting standard 9 we have learning concepts, understanding the meaning of term revenue recognition and the applicability and non-applicability of the standard, and main principles in relation to revenue recognition, and revenue recognition in case of sale of good, and revenue recognition in case of services, and revenue recognition in case of interest, royalty and dividend. Now this standard mainly deals with the timing of recognition of revenue and the amount to be recognized. So this standard deals with the recognition of revenue in the profit and loss statement of an entity. This standard mainly focuses on the timing of recognition, when to record in the books, that is when to record in the books. Generally the amount of revenue is determined by agreement between two parties that is involved in the transaction. Here revenue refers to gross inflow of cash, receivables and other consideration in the course of business from sale of goods, sale of services and income by way of holding the investment. Now we are going to discuss about second, that is applicability and non-applicability of the standard. First we focus on non-applicability of the standard. So from non-applicability we have drawn an arrow mark, that is this standard does not apply to in case of construction contracts, that is revenue recognition in case of construction contracts, because there is a separate standard for this, that is AS7, and revenue recognition in case of lease contracts. So for lease contract also there is a separate standard, that is AS19. So this standard does not apply to lease contracts. And revenue recognition in case of gout grants. So for the gout grants also there is a separate standard, that is AS12. So this revenue recognition does not apply to gout grants now. So following these three are non-applicable, and only this standard will applicable only in case of sale of good, and in case of services, and in case of holding any investment, and you will get any interest or dividend or royalty from that. So this standard applies to only these three, and non-applicability to construction contracts, lease contracts and gout grants. This following five is not treated as a revenue. What are those? Means profit on sale of fixed assets or investments. So when you make any profit on a sale of fixed assets or investment, so it is not treated as a revenue because it is a profit. And second, that is natural increase in the regeneration resources. When there is a natural increase in the regeneration of resources, so it is not treated as a revenue. Natural increase means you are not doing anything for that to increase their value. It is naturally increase in the source. And the settlement of liability at a value which is less than its book value. So it is also not treated as a revenue, because when you have a liability in the book value, that is 100 rupees or 200 rupees, and you are settling that if you suppose you take 100 rupees as a liability, you are settling for 95, remaining 5 is not treated as a revenue. And the fourth is unrealized gain on revaluation of fixed assets. So when there is a unrealized gain on the revaluation of fixed assets on us like machinery or building, so it is not treated as a revenue. And the last, that is gain arising on a liability which is in foreign currency terms. So these five are not treated as a revenue. And the next we are going to discuss about primary conditions for revenue recognition. So when we should recognize revenue, what are those primary conditions? That is measurability and certainty. So the primary conditions for revenue recognition is the criteria of measurability and the criteria of certainty in collection. Here certainty in collection means that you should not have any doubt whether the money comes or not comes. You should have confidence that money will arise. So what are the measurability criteria? The recognition of revenue, the entity should be able to quantify the amount of revenue. That is, the entity should recognize how much the amount is going to arise, that is maybe 10,000 or 20,000. So there should be a measurability of the entity. If there is no quantification of a revenue recognition should postpone up to the point of time it becomes measurable. So friends, if you can't measure now, suppose you can measure after 6 months, then you should recognize revenue only after the 6 months. You should not recognize revenue today, because it is going to measurable at after 6 months. And what are the certainty or in collections? Certainty in collection means the entity should be substantially certain about its collection, generally beyond the doubt. Revenue should be recognized only when the answer, that is how much it should be recognized, whether 10,000 or 20,000, there should be a certainty in collection, and that should be no doubt that the revenue will be going to come into the entity. And a revenue once recognized cannot be reversed. If uncertainty arises at a later point of time, one should either create a provision or a book for a bad debts. So now today you have measured as per the primary conditions of revenue recognition, you have measured that 10,000 is going to recognize, and there is a certainty of collection. If later point of time any uncertainty may happen, so at that time you should create provision or you should make bad debts. So now next we are going to discuss about revenue recognition in case of sale of goods. Now we are going to discuss about revenue recognition in case of sale of goods. So when there is a sale, if the following three conditions are cumulatively met, then we can recognize on the sale of goods, that is revenue recognition in case of sale of goods. First, there should be a significant risk and rewards in relation to ownership of goods are to be transferred to the buyer. So when you are making a sale, the risk and rewards should be transferred in relation to ownership to the buyer. So this is the one condition. And second is revenue is measurable. So if you make a sale of goods, the revenue should be measurable. That means if you sell a system or computer, there should be a revenue recognition at 40,000 or 50,000. So this is the measurable. So what amount you are saying to buyer, this is a measurable of a sale of goods. And the third, that is when there is no uncertain in relation to collection. It means there should be a certain in case of collection of amount. So friends, now let us see these 3 points in one example. Now you are going to one shop and you are identified a good, and now the seller, we should think from seller point of view. Now seller sold goods, so seller should transfer risk and reward in relation to ownership to you. So here the first condition is met. And when we go to revenue is measurable, so here the seller should say that good, whatever the buyer is selected, that good at 40,000 or some amount. So this is measurable. So the good had a value that is known as measurability. So the second condition also satisfied, that is revenue is measurable. And now the third condition, and now when you are making sale, there should be certain. So whatever good is selected by buyer and whatever amount you told that measurability, that the third party, that is a second party, that the buyer should able to give to you. So this is a certainty of collection. So from this example we have got a clear idea about revenue recognition in case of sale of goods. Now there are some situation, how do you deal with this? Those are, now let us discuss some situation and how would you recognize revenue from it. Those are, delivery of goods is delayed at buyer's request. So when you are making a sale and the buyer himself told the delivery should be delayed as he requested to you, so how you will recognize revenue? Here recognition of revenue when it is expected that delivery will be made and it should satisfy the following conditions, that is good must be in hand, and the second condition is the buyer's good should be identified. So the good should be in hand and the whatever the good is purchased, it should be identified. And the third is good must be ready for delivery at the time of recognition. So if these three conditions are cumulatively met, you can recognize revenue at whatever point of time. And the next, that is delivery subject to some conditions. Now in this situation, recognize revenue. Here recognize the revenue, customer accepts the delivery and installation and inspection is complete. So now you are selling a machinery. Suppose you think you are selling a machinery and the buyer is said that delivery to the office space. So here you are gave delivery and the customer accepted, and the installation and inspection is also completed. So the installation, some other whatever you need for the machinery for ready for use, so those are totally completed. If installation is a simple process, recognize the revenue when they are delivered. So if installation is a simple process, so it does not deal with any main criteria of machinery, so you can recognize revenue at the delivery point of time only. And now, subject to the approval of customer. So in this situation, when you will recognize revenue, for this, revenue should be recognized only when goods are formally accepted by the buyer or time period allowed is elapsed. So if the buyer accepts, you can recognize the revenue, or if the seller gave a prescribed time for the accepting the delivery and the customer is failed to accept in prescribed time, so at that time the revenue can be recognized. Either reasonable time period is elapsed in case of no specific period is mentioned. So if these conditions are any one of these is met, you can recognize revenue at any point of time, that is whatever the condition is met. And when we come to the consignment sale, recognize revenue only when the goods are sold to a third party by the consignee. So here already you have seen the consignment chapter in CPT. So here the parties are consignor and consignee. When consignor sends goods to consignee, and when you will recognize revenue, it means when consignor send goods to consignee. Here consignee is an principal and agent relationship. So when consignee sells goods to the third party, then you can recognize the revenue. And what is the in case of guaranteed sales? Here guaranteed sales means goods are delivered by giving an unlimited right to a return to a buyer. So here guaranteed sales means here the seller has given ultimate rights to give back to the seller if it doesn't works. That means guarantee sales, goods are delivered by giving an unlimited rights to return to the buyer. It depends on the substance of the agreement. In case of retail sales, if an entity offers a guarantee of money back if not completely satisfied, it may appropriate to recognize revenue for full invoice amount at the time of sale of good, and the entity can create an appropriate provision for the expected good return based on the previous experience. If in case of guaranteed sale, in case of guaranteed sales, when you make a sale, and what you can recognize revenue at the point of sale time, and whatever the, as here definition says that guaranteed sales, he has given unlimited rights to return the good. So you should make, if you are going to know that some goods are going come back, so at that time you should make provision for such goods whichever is going to return you back. How this may happens? It means as this entity knows from previous experience that these goods are going to return back, at that time revenue should be recognized. And when we going to in case of revenue recognition in case of services. Now we are going through revenue recognition in case of services. In case of services, the revenue could be recognized when the following conditions are met. That is, so these conditions should be cumulatively met. That is, services are performed. So without if there is no services is performed, you cannot treat it as a services. So there should be services should be performed. And the second condition is revenue is measurable. And the third condition is no uncertainty in regard to collections. So here also let us see one example. Now you are going through some service provider, you may think as a chartered accountant. So chartered accountant, for audit report you are going for the audit report, for the services you are going to meet a chartered accountant. So the chartered accountant should provide services to you. So there is service performed. And when you chartered accountant says that as his collection fee, so it is a measurable, and the service receiver should give the money to the service provider. So it is the certainty of collection. So if these three are cumulatively met, we can say there is a revenue recognition in case of services. Now in this also there are some situations how you will deal with it is, that is installations fee. In this, recognition only when installation is completed and accepted by the customer. And when it comes to the advertisement income, recognize the revenue when the related advertisement appears before the public. So now some companies may go through media for the advertisement income. Recognition the revenue when the related advertisement appears before the public. So some companies may go for the advertisement. So when there should be a recognition of revenue. Here the recognition of revenue should be made when the given advertisement is before the public. So there should be a recognition of revenue. And insurance agency commission. Here recognition of revenue on the effective commencement or renewal dates on the related insurance policies. This is the revenue recognition in case of insurance agents commission. And when we are going through tuition fees, recognize over the period of instruction of SLM basis. So when you are providing your services and when you are going to collect the fees, so you should recognize at that point of time. And when we are going to the entrance fees, see here revenue recognized depends on the nature of services being provided, and entrance fee received is generally capitalized. So entrance fees is generally capitalized. It is not related to any particular year, hence it is appropriate to capitalize. And the last, that is membership fees. If the membership fees permits only membership to the member, recognize when it is received. So when it is received, you can recognize the revenue. If the membership fee entitles the membership and the other services and publications during the year, it should be recognized on a systematic and rational basis. So these are the situations when we should recognize revenue. So we have completed revenue recognition in case of sale of goods and revenue recognition in case of services. Now let us see revenue recognition in case of royalty, dividend and interest. Now we are going through last head, that is revenue recognition in case of dividend, interest and royalty. Let us see separately revenue recognition in case of dividend. Here when you should recognize dividend income. Here dividend can be recognized as a revenue only when the investor gets the legal rights to receive the dividend. So when the investor gets a legal rights to receive the dividend, he can recognize the revenue. Practically, in case of final dividend, investor would get the legal rights post AGM, that is annual general meeting. For example, now there is a AGM in next 6 months. Before in the AGM you will declare dividend. So from that you get the legal rights to receive the dividend. For the financial year 13-14, if the AGM is conducted in 14-15, then the dividend can be recognized for 13-14 only post AGM. Note here as we discussed in case of sale of goods and in case of sale of services, as there is two conditions should be met, that is measurability and the condition of collectability. And here also when we are discussing about dividend also, it should also be a measurability and the collectability. And revenue recognized in case of interest. Here in case of interest, a revenue could be recognized on accrual basis, that is time basis. That is, if the interest is accrued but not due. Here this interest also condition subject to the condition, that is it should be also a measurable and should be collectability. And last, that is revenue recognition in case of royalty. Here royalty is the income earned on the intangibles. That is, in a case of royalty, revenue should be recognized as per the understanding agreement between the parties. As we discussed in dividend and interest, here royalty should be also a measurability and the collectability. Here we have completed AS9 and we are looking for next standard, that is AS7 in next video.